A credit score is a three-digit number, typically between 300 and 850. However, some companies actually go up to 900. It represents your credit risk to banks and other companies. They say, hey, a person with a lower number, high risk. A person with a higher number, low risk. A person with a lower number, higher interest rate. Therefore, their monthly payment is higher. A person with a higher credit score, low risk, lower monthly payment. You actually save money if you have a high credit score. What is good credit, or what is your credit score? Fair, good, very good, and excellent. Again, if you have a 750 to a 760, 770 credit score, you probably will get a good car loan, a good mortgage, or anything else you want.
Why is your credit score so important? A credit score determines your financial health. It can unlock so many benefits for you: buying a car, buying a house, applying for an apartment, student loans. A credit score is the second most important number in your life next to your social security number.
Types of unsecured credit card. Your basic credit card, where you apply, the bank runs your credit score, sees your background, if you work, you have income, things like that, and they will give you a credit card. An airline credit card, a business credit card, student credit card. These are called unsecured debt because there's nothing backing it. The company takes a chance with you and see how good you are in paying back your debt. A secured credit card is when you deposit money into a savings account, which is refundable. Let's say, for example, you deposit $500 into an account, and they will give you a credit card for $500. If you spend 100, your account will go down to 400. If you add more money, let's say you add 500 into your account will go back up to 900. Depends on how much money you put in the account and how much money you spend with the credit card. It's called a secured credit card, and it's a way to start building credit for the bank to gauge how well you are at managing your finances and paying back your bills when due. A student credit card is offered to students 18 and older, but most of the time are offered to juniors and seniors who are graduating college. The bank usually gives them a small amount of credit just to see and gauge how well they spend their money, how they pay their bills, and how timely their payments are made. A small business credit card offers business owners, freelancers, or even people who own internet businesses money to meet their day-to-day expenses or buy extra materials. It works the same as a regular credit card. They will check your credit to see what type of credit scores you have, and that will determine how much credit limit they will extend to you. A store credit card is offered by large department stores or chain stores where they'll have zero annual fees. However, you need a decent credit score, 640 and up, and you can only use your credit card in that store for purchases in that store or its affiliates around the country. A charge card is a credit card. However, in 30 days, you have to pay the entire amount you charge. How to get a credit card? Very simple. Apply to a bank. Lots of banks, all different programs. Apply for a credit card. Provide your documents. Provide how much income you make, your address, your identity, and show them that you are a legitimate person and you're not committing a fraud. And most of the time, if you have decent credit or even no credit as a student, they may offer you a credit card and start you with a small amount as you're a student and you haven't had a chance to build a credit history as of yet. Using secure credit to build your credit. Basically, you deposit money into a bank and you use the credit card and you constantly replenish the money in the account. This makes the bank see that you're very responsible, you're mature enough to handle a credit card, and you're constantly replacing money. Therefore, if you had a bill to pay every month with a regular credit card, this looks good. It's a good reflection on how you manage money, and it's a great way to build up your credit for the future. How to manage your credit card use. Number one, pay it off. Pay it off as soon as you can. Pay it out as much as you can. Even if you charge $1,000, do your best to pay it off. Then there is refinancing your credit card with a personal loan. Go to the bank, say, hey, I want to consolidate my three credit cards. I want a loan. I want to pay it off, and I'll just pay one bill to you. Ask for a higher credit limit. You can call your bank and say, hey, I've been with you for a year. I paid my bills on time for a year. Is it possible you can give me a credit increase? Get another credit card. Try to have at least 3 open lines of credit cards. How to plan your credit card payments? Take the credit card with the highest interest rate and drop most of your money into that credit card to pay it out. Put extra money if you have to. Constantly keep paying. Pay the minimum on the lower interest rate cards. Pay the max or the most you can on the high interest credit cards, and you will eventually pay off the credit. Your credit report is basically like a report card that stays with you for life, and it has all of your financial history on it. A good rule of thumb is to every year request a free copy of your credit report to monitor what's going on in your credit, what cards you have open, what accounts you have open, what you have closed, what you have paid off, and also check for fraud. Therefore, every 12 months, you are, by federal law, allowed to get a free copy of your credit report. Take advantage of it and monitor it, and keep every copy every year in a file. Therefore, you would always check and recheck if something has changed or there's something new and you couldn't tell. You can always go back and